Denver home prices have just had the largest increase since rates were under 3%. That's right, ladies and gentlemen. We are at the beginning of April, and you know what that means? We get to look at March numbers, real spring numbers for the home buying season to really dig into what's going on out there. How bad are interest rates? How much is it affecting the housing market? And man, this month did not disappoint. I literally haven't seen anything like this since March, April of 2022, when rates were, around 3%. That's just right before they started to go up and we started to feel this lull and shift in the market. We're going to jump right into this and check it out. But if you're new here, my name's Alex Saldana. I've been a local Denver real estate agent since 2010, helping homeowners, buyers make a shift around Denver and just answering the questions that everybody wants to know about our housing market. So without further ado, I'm going to jump right into it. And normally, I look at more of the metro numbers, okay? The entire Denver Metro MLS, which is going to include, parts of Boulder and Broomfield and Thornton, North Glen, down to Littleton, Parker, everywhere around the Denver metro area. But we're going to break it down a little bit and look at just Denver, because it kind of reflects what's going on everywhere, but it makes the numbers that much crazier. So starting with the closed price, what everybody wants to know, prices going up and down. Well, holy cow, they've gone up. So what we're looking at here is a snapshot of the last 3 years, okay? And we can see in February, the median closed price was $560,000 for Denver. And March, $600,000. That is a $40,000 increase in the median home price, which is over 7%, right? We haven't seen that since back in 2022. February of 2022, we had about a $45,000 price increase, and that was crazy then. This is just as crazy today. Now, chalk it up to whatever you want. Not a whole lot of houses are on the market in comparison to what was on the market then. And so numbers can be a little bit skewed because we're just not selling as many houses. Lots of people have been feeling stuck in their properties because of their low interest rates, but people have been feeling stuck for about a year and a half, 2 years now, and it's finally time to make that move. People have reached the point where they've outgrown their house and they're just done. They realize interest rates may not be dropping anymore. And so everybody that's been kind of on the sidelines the last year and a half is starting to get off the fences right now. So to look at the bigger overall area, in the entire MLS, we went up from 550 as the median price all the way up to 575. So that's still a 5% bump in the median home prices in the entire Denver Metro MLS. All right, now to go back to Denver. The amount of new listings that hit the market, gosh, not a whole lot, not as many as I was thinking. We had 1,200 new listings hit the market in February. We had 1,300 hit in March. Usually we see a bump like we did last year from 848 in February all the way up to 1,300. I mean, good 50% more. It just wasn't any, we had 7% more in inventory as far as new listings are going. So not as much coming on as I actually thought. Over to active listings, usually again, we really start to see this number ramp up on how much is available. Like last year, we went from 1,350 to 1,550, another 200. This year, we're pretty much flat. Year before, same deal, 673 up to 868. A decent increase, at least this year, nothing, nada. Pending listings. So here we go. This is where supply and demand really starts to take effect here. February, we had 877 properties go under contract. Now, this is just Denver specific, not the broader metro area again. At 877 listings, all the way up to 1,100. So what, 250 more properties go under contract than we had last month. So another 25% increase. Now that is fairly typical year after year. We can see we max out in properties going under contract in roughly April. Properties then peak out May and June for closings as well as prices. But a fair bump in pending listings. I mean, we're already over last year for the amount of under contract properties. So that's telling me that closings should follow suit in the next 30 to 60 days, right? Closed listings, we had a good bump up here, another 100 closed from February up until March. Where were we last year? So last March, we actually had more, 950 closings in March compared to 900 this month. Let's see the broader Denver metro area. So this is where it feels a little bit better. 5,300 closed listings in March compared to last year. It's 6,100. So we're still down significantly year over year on the amount of closed listings, which has been what's been driving kind of what feels like a stale market, right? All right, on to days in MLS. This just dropped like a rock. I mean, we went from 37 days on the market down to 26 days, down to 14 days for the entire Denver metro area. Let's look at just Denver. I think it's even more extreme. We went from 39 days on the market to 23 to 9. The average days on market right now for Denver is 9. That is insanity. But this happens every single year. I mean, we can zoom out for the last 15 years and we can see like it's just a heartbeat, every spring days on market drops. So just interesting to see all this. Now, month supply of inventory, here is your real supply and demand. Looking at Denver alone, we're flat for the month. So if there were no new houses to come on the market today, it would take approximately 2 months to sell every single one of those properties on the market. Last year, we were at quite a bit lower, 1.3 and 1.6 months of inventory. So overall, a little bit more inventory on the market compared to how many closings are happening. You got to remember, this is a relative number. So as we sell more properties and have higher closed numbers, these numbers kind of readjust to how many months supply of inventory we have. If we're only selling a few hundred homes a month, this number is going to be through the roof with what's currently on the market. So this is just a real good barometer as far as, if it's a buyer's or a seller's market. And just to kind of, refresh your memories on what a typical average market is like is 4 to 6 months of inventory. Okay. And right now we're sitting at 2. Last year we were a little bit higher for a couple of months, but overall, like that's still extremely low inventory numbers. Percentage of closed price to list price. So this is, sitting at 100%. This number, I don't know if I like it too much because this is just stating, hey, if you had your house on the market for $500,000 and it sold at $500,000, it would be 100%. If it sold at $505,000, it would be 101%. And we see different spikes, and you can see back in 2022, things were selling on average for 6% over the list price. But this doesn't take into account price drops. So let's say you were on the market for $500 and you end up having to drop down to $450, and then you got it under contract at $450. Well, it's still showing 100%. It's not showing the original list price to the eventual close price. So again, take this number with a grain of salt. Showings to go pending. So right now we're at about 11 showings until most properties go under contract, right? That is the average. Same with last month, pretty typical. And in December and January, we had to have 13 to 14 showings, so a few more. And then the amount of showings per listing just starting to tick up. So we can see here it's taking about 7.4 showings per listing per month on the market. So just a little bit more than last month, quite a bit more than what we see in the winter months. Compared to last year, it was a little bit higher. So there was more showing traffic last year, but there's less stuff on the market this year. So it all balances out in the wash. And if we were to go look at the larger metro area, we can see it paints pretty much the same picture here. So it's pretty fascinating. I mean, if you want to see some other big ones here, let's look at Littleton specifically. So this is fascinating, right? So Littleton, February's median close price was $630,000. In March, we actually went down a tick. Why? Well, like I said, with fewer closings happening, these numbers do get a little bit skewed. So if there's more cheaper properties selling, right now, that's going to skew these numbers. But I'm actually really surprised about that in Littleton. Let's take a look at another popular city around here, Parker. Parker's taken off like a rocket. We went from 650,000 all the way up to 672. And then let's look at Aurora, just up a nudge. right? Went from 485 up to 489. So, it's just interesting to see what's going around Golden. You want to see a fun one? Our median sales price in Golden for February was 706,000. We've gone all the way up to 927,000. Gosh, what's that? Over 20% increase in 1 month. But this is a median price. Like I said, there hasn't been a whole lot to sell. Let's just see how many closings that's based on. I mean, there were only 56 properties closed in March in the entire city of Golden. So that's what I mean when I say that a lot of these numbers can absolutely be skewed. So where do we go from here? What's my prediction? What's my crystal ball that's broken half the time? I joke, I try to be really good and non-biased on this and just listen to the numbers, but we're still in a supply and demand issue. Does that mean you can ask for ridiculous amounts on your home? No. In fact, it's the opposite. You should list for the correct price, and then in that event, you're more likely to get multiple offers. You try to price too high and you end up sitting stale on the market for more than a week or two. And because everything's so fast in this market, people automatically assume that something's wrong with the house, right? So your best strategy, if you're a seller, is to price it right out of the gate. That gives you the best chance of getting multiple offers and getting it under contract within the first weekend, making your move easy, being able to negotiate terms. If you're a buyer right now, the frustrations are high. Interest rates are high. They're at 7% today. But there's also no inventory to buy. So you've probably been looking for a few months. Heck, you probably started in November and December. And the neighborhood you want to live in, maybe you've only had 1 or 2 properties to even come up in those neighborhoods, and both of them, of course, suck and don't match what you're looking for. So there are some frustrations out there. And then on the other side, on newer built homes, there's a fairly good supply of new homes on the market through the big national builders out there. And they're still offering incredible incentives that are getting people into homes in the 4% interest rate zone. So a lot of people are going to the new build communities, the properties that were built from 2018 to 2022 that people are now trying to resell. Those homes are struggling because they're competing with the new homes that are out there. So it's an interesting market overall, but we just feel more stabilized than anything. We just don't have a lot of properties on the market. I wish we had 3 times more houses and, of course, 3 times more buyers, and I'd rather be balanced with at least some choices out there. But without many choices in the prime areas, it's still driving up prices like crazy. I'm really fascinated to see if we're going to break 2022's prices. And just to give you an idea of where that was. So if we go back and we look at the closed price, and let's just do the entire Denver Metro MLS. So we're at $575 right now. We peaked out at $600,000. So we're only $25,000 away. And you can see it usually peaks out in April. And if we look at our full timeline, let's just look at the peak months. So here we've got June in 2021. I've actually got October of 2020. Scratch that year, goofy year. In 2019, our peak was May, right? In 2018, our peak was May. In 2017, our peak was June. So right about now is when the properties are going under contract to then be closing in end of April, May, and even partly into June, which are the peak closed price numbers. So, I don't doubt that we might actually break our all-time highs, which everybody's been kind of waiting for here. So if you're on the sell side, here's my advice for you. Is get ready now. From now until Mother's Day is usually really, really solid. After that, you start getting into the summer months. There's going to be more inventory on the market cyclically as the numbers show. And, you might sit on the market for 2 to 4 weeks, right? If you're priced accordingly. Now, if you're a buyer, you have been in the same boat for the last 2 years, but not a whole lot to buy. You got to suck up the interest rates if you want to move, if you want to buy in Denver, and then you're hoping that interest rates are going to drop within the next year or two so you can do a refi. But if they do, man, prices are going to skyrocket like crazy. Like if all of a sudden tomorrow interest rates were at 4% or even 5%, like we would probably go up 10% next month in home prices on the median side. So not an easy solution, but if you have any questions and you want to dig into it further, I'd love to help. We strategize with buyers, sellers every single day. And, if you missed last month's numbers to see what last month was doing in comparison to this month, check out this video. It'll walk you through everything. And if you got any questions, give me a call, shoot me a text message anytime, nights, days, weekends. I got you covered. Until the next time, folks, happy housing.